As expected, last night, Wall Street and corporate America took a lashing when Democrats took the stage. So let's cover politics in your portfolio. Zeb Fema, research analyst for Jim Cramer's Action Alerts Plus portfolio, and Kenny Polcari, managing principal at Butcher Joseph Asset Management, join me. All right, guys, portfolio-wise, what was your biggest takeaway from last night's debate? Kenny, let's start with you.
Taxes, taxes, taxes. That was my big takeaway. How we're going to pay for all these plans that the Democrats want to launch, whether it's healthcare, whether it's Social Security, whatever. Elizabeth Warren starts it with all her new taxes on the rich, on the wealthy, all that stuff. So I would be very cautious. I still think it's too early to start to build a portfolio around it because I think the field is way too big still. There's at least 10 that were on last night, plus the stragglers that are still hanging around. So I would want to wait until it's condensed a little bit more and you really understand who the top 3 or 4 and what their policies are really going to mean before I'd really start to try to build a portfolio, especially around what happened last night. Because as you probably recognize, there wasn't a whole lot of economic talk last night. There wasn't anything that dragged, that pulled me into the conversation about the economy. It was much more about healthcare. It was about raising taxes. It was about Elizabeth Warren's plans and everyone else, immigration. And so I didn't get anything last night that was going to cause me to say, oh, I need to change my portfolio at the moment. I think that's going to happen, like I said, as we move into 2020 and that field gets culled down, and then there are 3 or 4 more dynamic choices, and then you're going to start to see, okay, what's this really going to mean, and then what's it going to mean for my portfolio.
Zeb, as someone who already has a built portfolio, what are you watching?
So I definitely think, as Kenny mentioned, it's way too early to really start tailoring the portfolio around who could become the nominee. I think the one thing that was clear from last night is we still don't know who really has it. Is it Warren, Biden, Bernie? Is someone else kind of coming up through the fold? But the one thing that we've really been watching is the healthcare sector. The first maybe 30 minutes or so was all about, do we want Medicare for all? Do we just want a public option? Obviously, Bernie and Elizabeth Warren, they're in support of that. So them sort of being 2 of the 3 front runners has obviously placed a lot of pressure on UNH, CVS. But then Biden, if he gets the nominee, then healthcare is a little bit safer. And just looking at the markets this morning, I think people are starting to realize that Biden is still sort of leading the way because you do see CVS, you do see UNH coming up. And if Warren and Bernie had really kind of leapt over him, I think you would have seen some pressure on those stocks. But the bottom line is for us right now, we're not really making any moves in the portfolio because, as Kenny put it, it's just too early to tell, where we're going to be. And the differences between the candidates are not huge in every topic, but for things like healthcare, depending on who gets the nominee, you can see like real moves in the healthcare space, I think.
Right, and I think what was interesting, I think that Joe Biden actually performed well last night. I thought he was in control. How there's been this conversation about he's losing his train of thought and he says the wrong things or he confuses. I didn't see any of that in him last night. And so therefore, I think that was a positive performance by him, which leaves him closer to the top than maybe slipping out. And so I think there's, like Zeb just said, I think there's still too much time that people shouldn't necessarily start building a portfolio around the chaos that's yet to come. So I think you just sit tight.
Keep calm and carry on, as some could say. So besides for the Democratic debate, there's also a lot of headlines about the trade war. And, I'm wondering, should investors be optimistic about Trump's willingness to agree to a partial deal with China, considering that he's still asking for quite a bit? Zev, let's kick it off with you.
So I think trying to trade Trump's tweets is it's almost impossible. Like I don't think anyone can really do it with intense conviction. And I know yesterday we got this news that maybe he was talking about a partial deal, and then we sold off because they were like, no, that's not really happening. And then we kind of bounced back where he's saying we are looking at a partial deal. I think the bottom line is with Trump, you have to just accept that uncertainty is sort of the name of the game. And the way that we we're not traders for Action Alerts Plus. The way that we tell members you have to look at this is, listen, figure out the names that you want, the names that you believe in for the long term. I think eventually we do get a deal because I am of the belief that the 2 biggest economies in the world are going to have to work together at some point. It's not going to be sustainable that, the IP theft, things like that are going on. But if you're going to be someone who's approaching this market day to day, you have to be ready for volatility. You have to accept that at any moment a tweet can come that sends the market higher, sends the market lower. We all know that Trump's got really keyed in on the key levels there. But what we tell members is just figure out those names that you really want to buy and wait. Just wait for the weakness, wait for the sell-off. Look for those secular names. Like we saw rotation earlier this week out of the high-flying software stocks. Twilio is one name that we own. That got hit. We told members, we were like, listen, this is your chance. If you've been waiting for it, we didn't want you to chase it at 120, 125, 130. And people kept asking, what do we do? What do we do? And then the sell-off comes and people get nervous, right? Like all of a sudden, everyone wants a correction until they get it. But that's kind of how you have to use Trump's tweets to your advantage, in my opinion. When he knocks down those stocks that you believe in for the long term, you go buy them. And that's really been kind of, in my view, the name of the game since he was elected. I mean, we saw him complain at the very beginning about the cost of Air Force One, and Boeing got hit. And Boeing's got problems now, but if you bought it on that tweet, you made a lot of money. He went after Lockheed Martin. If you bought it on those tweets, you made a lot of money. And that may have even been before he actually took office. So that's how I think you use the Trump tweets. When it's something really positive, you can use the strength to trim. When it's something negative, you just have to use the strength to get in. But to think that you can actually predict what he's going to say next, in my opinion, is crazy.
Well, I don't think, I think that's true. You can't predict it. But, if you want to talk about who can trade Trump's tweets, I think the people that know the tweet is coming the night before are the ones that are trading Trump's tweets, right? Because if they know what he's going to say the night before, positive or negative, then they set themselves up. Now, listen, that screams of manipulation. I hear you. But there are some times when you just scratch your head because you look at the tweets, you see what happens to the market. Then when the market trades down to a certain level, then he comes out and says something positive, and boom, it takes right off again. And so there's been a lot of conversation about what his tweets actually do. Can you classify it as manipulation? I would absolutely say there's manipulation in those tweets. Now, whether or not anyone knows the tweet's coming or not, that's a whole nother conversation. But one way or the other, to your point, I use that then analogy, as the Bloomingdale's analogy, right? Because when Bloomingdale has a sale and clothes are on sale 10, 20, 40%, men and women go running into the store to buy the clothes. They don't go running into the store to bring the clothes back. They go to buy more. And what's amazing to me is that when that happens in the stock market, when there's a sale going on, however it happens, through a tweet, whatever, but it's a sale that's going to cause a temporary dislocation in a name or in names, people get nervous and they go, oh my God, this is the end. And so they sell versus doing exactly what you said they should do. Use that opportunity as long as the name is a name that they like. It's a name in their portfolio. It's a name that they've done their homework on, to take advantage of that temporary dislocated weakness to add to that position. The same way they add to their wardrobe when Bloomingdale's has a sale. And it's the most frustrating thing to sit here and watch that happen and have people talk to you and get nervous about, the weakness in the market. Look, when the market's weak for broad geopolitical, fundamental, global economic reasons, that's one story. But when the market gets weak because Trump sends out a tweet that causes this temporary dislocation, that's where people are missing the boat.
Kenny, I can't tell that you're frustrated at all.
No, and just to clarify, I do think Kenny's 100% right. I mean, you know Trump's watching the market, and I think if you are going to try and predict what is coming, then we have seen once you kind of get to the 200-day on, say, the Dow Jones, he wants to come in, he wants it higher. But then when he gets strength, you also know he feels like, what did he say? Playing with the house's money, he can go a little bit harder on China. That's what he did last time he got the Fed rate cut, right? So it'll be kind of interesting to see what he does now ahead of the Fed meeting, markets at all-time highs.
What do you mean what he does now? Look what he did yesterday or the other day. He called Jay Powell and the whole Federal Reserve a bunch of boneheads, which I think is hugely inappropriate. Hugely inappropriate. But what ends up happening is it's tweets like that cause the chaos and the frustration really in the system. And for most of us, we can see a tweet like that and laugh and go, okay, there he is again, acting like a buffoon. But the smart logic algos that read those headlines and pick out those words can't interpret it the same way you and I can interpret it and just laugh it off. The algos react to it, right? And create buy or sell orders based on the tone or what the algorithm interprets the tone of those words to mean, which is when you see that chaos and dislocation in the names. And that's, I think, what people need to eliminate as a long-term investor. They need to eliminate that short-term noise, take advantage of it if they're able to, but they can't trade their portfolio around that short-term short-term noise every time he says something.
All right, guys, and before I let both of you go, outside of politics, what are you expecting from the Fed next week?
25 basis points. I think there's parts of the market that were wishing for a 50. Listen, I'm not even a buyer that we need to cut. I wish that he would stand up and say, no more, we're done. But he's now forced into this position by the market and by Trump to have to cut rates, because if he doesn't, after they've floated all the balloons, after they've tested the market, after they basically told everybody that, we're going to do this, if he doesn't do it now, the market will get slaughtered. Trump will lob bombs at him. It'll be a disaster, right? And everyone will blame him for the sell-off. So therefore, I think he's actually forced into having to make this cut. What I'm hoping we get from him afterwards is that this is not the beginning of a rate cycle cut, that this is it. Enough is enough. We're going to sit back. We're going to watch, because look, we're now going to be at 2% in rates. Historic lows once again. I don't think there's any reason for us to go zero to negative the way Trump wants. It's great for him because he'll refinance every property he has and make a killing. But it's going to be no good for people like you and me and Zev that want to go out there and buy a house because rates go to zero. Who's going to give you a mortgage? Who's going to lend you money and not for zero? I'm just curious. Who's going to lend money at zero to Joe Q Public? They'll be happy to lend it to corporations. They'll be happy to lend it to billionaires because they'll refinance. They got all those properties, supporting it. But if Zev wants to go and buy a house at rates of zero, the bank's going to say, nah, not so much. I'm not lending money at zero rates. And so I think it's actually going to be a problem if we force rates, or he forces rates to go to zero. Do you agree?
Yeah, I do agree. I think we do get the 25 basis point cut, and I think the most important thing is going to be commentary. We know what Trump is saying about Powell, but also look what we got yesterday on the core CPI. We got 2.4%. So the Fed watches core PCE, but CPI is like another proxy we can look at for inflation, and that would tell you that we're trending or we're starting to trend a little bit above that 2% target rate. That said, obviously there's a lot of pressure on them. The expectations are to cut. So I think if they don't cut, like Kenny said, the market is taking a big step lower. I think we get the 25 basis point cut, both because the market wants it, but also if you look at the bond market at this point, the federal funds rate is basically at the same point as the 30-year. And if we want to try and get the yield curve back into how it should be, which is longer term debt yields higher rates, then we do need the cut. But also, to Kenny's point, the economy is strong. I don't think we want to cut so much that when things start to weaken, we've already used all our ammo. I mean, every cut we do now is a cut we can't do down the road, unless we're going to go negative, which really is not the best thing. So 25 basis points and commentary is going to be most important. What I would expect him to say, what he should say is we're going to keep looking at the data. We're going to take it day by day. Don't forecast things and walk yourself into a corner where you then have to act later.
And we're not on a cycle, which means in October we're cutting, in December we're cutting, in January we're cutting. We don't want to be on a cycle. And look at this. Retail sales this morning came out at plus 0.4. The expectation was plus 0.2. So that number is stronger, signifies the consumer's okay, everything's fine, people are actually spending money. So this whole argument about, oh my God, the economy's so weak. The U.S. economy is not that weak. I think it can support rates exactly where we are. And I think it's just a temper tantrum that's being thrown because Trump is trying to force them to zero. But look at this. Europe has had negative rates for how long now? And they're still struggling. Japan has been 3 decades of negative rates. Oh, right. That was a positive experience. So why do we want rates in this country to go to zero or negative? In my opinion, we don't. You're never going to convince me that we should.
All right, guys. Kenny, Zev, thank you so much for joining us.
Thank you for having me.
Thanks for having me.